syndication model was raising capital is a business in itself, right? It's something that you have to be strategic about and that you can be doing on a consistent basis. And so I learned that the hard way, that it's not just, hey, go find a deal and then people are just gonna break their necks to throw money at you for it.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Jackson Stubblefield. He's a real estate investor and syndicator and founder of S&S Capital Partners. How you doing, Jason? Thank you for joining us on the show.
I'm doing well, Dwaine. Thanks for having me.
Yeah, I appreciate you taking the time. I understand you just came from a little workout, so I appreciate you taking a little bit of time to talk to us on the show today. For those who are not familiar with you, would you mind just kind of giving a little bit about your background story? How'd you get started in real estate?
Sure. So I got started investing probably around 2009. So a brief introduction to my background. I joined the Marine Corps right out of high school, spent 4 years in the Marine Corps. After that, I went and got a degree in computer science. And, once I was working in the DC area, read Rich Dad, Poor Dad, started investing. I started in single families. That was around 2009. Did that for a while, and then I progressed into multifamily probably about early 2017.
You had mentioned you had read the book Rich Dad, Poor Dad. Was there any other transitional education or mentorship or partnership that helped you kind of transition into like the larger buildings?
No. Once I read Rich Dad, Poor Dad, I was sold. I was like, all right, this is what I need to do. I was ready to go. But there were networks that kind of got me over into the multifamily scene. And so with that, I was reaching out through networks and through some mentor programs.
Mm. And as far as kind of your first deal, was it in single family or did you just kind of get into the larger stuff right from the get-go?
Yes, I started in single family, bought a few single family homes, and then I had some equity in those homes, through the years. And so that's what actually had me looking to go and try to get a return on that money. And I was looking to invest it, trying to see where I could put it. That's what led me really into multifamily, because I saw the returns increase through the number of the more doors that I had in a unit, the better my return was.
Mm. As far as the multifamily that you own now, is it in the DC area or is it in another marketplace?
Not at all. Tennessee and Kentucky, really close to the Tennessee line is where my acquisitions are.
Okay, so how did you kind of look to go invest in those markets? Those are, some really strong marketplaces right now. I know a lot of people are really looking heavily in those areas. What kind of drew you to those areas? What are some of the indicators that other investors should be looking for?
Yeah, so I invested where I know. So I'm from Tennessee, and so I was always traveling back there. Well, not always, but I'm going there several times a year to visit my family, and so it made sense for me to have a property down in that area. So whenever I was going to see my family, I can always check on it.
Mm. As far as the number of units, how many units do you mind sharing with us?
Sure. So the first multifamily apartment was 34 units.
Okay. And so how did you kind of find that one? Was it just through, relationships with brokers, or would you, fans and family in the area that kind of tipped you on that deal? How did you, what was the whole process for that?
No, it was actually listed, and I saw the property. I was actually intimidated by it. So just a brief background, I was supposed to close on a couple of quads, right? So I was looking at some quads, just really trying to gradually move up was my plan. And so long story short, that deal didn't work out. I ended up backing out of the deal with the quads. And then I just called the agent, really trying to see what was going on. After I talked with the agent who had this 34 unit property, I was sold. Because it just had a lot of potential there that I saw.
Mm. So did it require like a lot of rehab, or was it more managerial type of thing?
Yes, it required a lot of rehab. And that's one of the things that attracted me to it. At the point where I bought it, it was 50% vacant. So there was only 17 up units. The other units were down. Required a ton of rehab, ton of deferred maintenance. But the reason I was attracted to it was because it still supported itself on that 50%.
Mm. Yeah, that's pretty good kind of going into the gate if it's, somewhat supporting itself already from there, not too much, not to be intimidated too much, knowing that, some money type of coming in. Did it feel any type of intimidation that, I got to rehab all these units and now you're working out of state trying to find contractors and then, work with the local, ordinances and all that different type of stuff? Like how did that feel?
I mean, I was scared out of my mind. Yeah, but it definitely had a lot of potential with it. So I knew there was something there. I felt confident in the numbers. I felt confident in the ability to turn it around. I just didn't know what I was doing.
Mm.
But, gradually kind of taking one step at a time, you kind of figure things out.
Well, yeah, that's definitely a feat to the fire. You jumping in and you kind of learn on the process. So that's good. So did you have any, the good experience as far as like the local contractors? Did you put it out to bid, or did you have like any recommendations, like, for people that's investing in a new state? And, how would you recommend you do that for them?
Yeah, I would recommend reaching out through bigger pockets, actually. So getting on there, just networking the areas, asking if anybody knows a contractor that they would recommend. For this property, I used the recommendation of the agent that sold it to me, and other just kind of word of mouth people that came around. It ended up that at one point I had hired like 3 different contractors because I saw that the initial contractor was just going way too slow. And so I needed this to be expedited. So I hired 3 and then ended up just sticking with one who's the best.
So what type of rehab was it? Was it more like you had to like tear down walls, redo type of stuff, or was it more like upgrading it to keep up with the market demand?
The bones of the building was good, right? So the roof was fine. It's brick exterior. So everything was really cosmetic on the interior of the units. But just talking about common area hallways that had to be done. We did some exterior, changing the signage, but the majority was just going in with vinyl plank flooring, new kitchens, new bathrooms, paint scheme, etc.
Oh, that's not too bad there. As far as like it being 34 unit, is that something that you had to, hire a property manager, or you kind of self-managing it, somewhat?
Yeah, so my dad is in the area and he's retired, so he actually ended up being my property manager.
Oh, perfect. Okay, so that works out, because usually when you're dealing with outside, you have to, and if it's under a certain amount of units, it's like, do I go with a manager? Do I not? So it's good that you have a family member in the area that's doing pretty well. Do you remember kind of what the numbers was as far as like what you bought it for, and then kind of what the rehab cost was for typical?
Yes. So it's highly distressed, and this building was $325,000. I think was the asking price, which was, depending on your market, you're just blown away that you could actually buy units that cheap. But it was definitely worth it. It wasn't worth more in the current condition that it was. So I bought it at that. I probably put about 200,000 into it, 225 somewhere around there, and then I recently had it appraised at 800,000.
Oh wow, that's a pretty big bump right there. So are you is the plan on to pull out and reinvest it to other deals, or just kind of see what you're doing and then take it from there?
Right. At this point, I've already refinanced and pulled out all my capital. So now it stays there as a cash flowing asset.
And then you had mentioned there's another one in Kentucky that you're working on as well. Was that the next project that you shifted over to?
Yes. Yep. So interestingly, like while I was going through the process of doing the rehab on those 34 units, there was a time where I wasn't that active anymore. The contractors knew how to rehab the units. My dad is doing the property management, and that was challenging, but we worked through it and kind of got our systems down. So I wasn't doing that much anymore, and I was like, this is going to take a long time before I can get into another deal. So through some of the networks that I belong to, I started talking to people like, hey, what can I do? What should I do? Should I just wait until this thing is refinanced, or should I look for other deals? And so, overwhelming response was go out and do another deal. But at that point, I knew that I made some mistakes in the first one. So that's when I really got into looking for mentorship and someone who could teach the syndication model, because I was out of money, right? All my money was into this project, and I was going to have to work with other people. And so taking on partners and dealing with other people's money, I wanted to make sure that I had somebody with way more experience than I had to kind of look over my shoulder.
Mm.
So doing that, that's what led me to syndicate 48 units in a neighboring market.
Mm. So kind of what was that whole process? Was that, so did you JV with that 48 unit, or is that just something that you got help from the mentor in order to get into that deal?
So I was the sponsor, general partner on that deal, and then I brought in outside investors or limited partners to provide the capital for it.
As far as like getting investors, did you already have like an existing pool of people that you knew, or just like a brand new set of investors? They saw that you had a track record and then they able to get into this deal. How did that work?
I did not, so I was coming pretty fresh off of that first 34 unit. I kind of took some time to learn the syndication model, and then I was like, all right, I'm ready to go. So I started networking with brokers, and then I found this property. I did not mistakenly go ahead and start trying to build relationships with people who would be interested in being a limited partner. So I kind of got the deal, like, okay, now I need investors to invest in this, and where are they going to come from? I was fortunate that some people who were in the same mentorship that I got some investors from there. I also ended up networking with other people who helped raise capital and kind of came into the general partnership with me. But if anybody who's listening who is looking to get started, you definitely don't want to do what I did, because I found myself, scrambling and lots of sleepless nights, and pounding out the phone call trying to raise equity for this deal.
Yeah, that was kind of be going into my next question, was kind of how did you handle the whole flow? Because usually when you usually have a set of investors that, yeah, I will invest in a type of project like this, and then you find that perfect deal, and it's a little bit easier to transition. But you found the deal first, and then the investors later, and then they found out it was kind of like everything was going on top of each other. So, like, how was like that whole process? I mean, you're like emailing and calling while negotiating the deal, and then putting the business plan together and everything. Like, how did that whole thing go down?
Stressful. That's how I would describe it. It was just stressful, man. But it was definitely a lot that I learned, and the thing that really got me through it was just having confidence in the deal. Like, I knew from when I saw this, was like, this is a deal. I know that the investors will be able to get a return on their money. I just have to find them. And so through that, it took me to have to push out the contract. I had to do contract extension to get me an extra 30 days to try to, get some extra capital to put into it. Also just networking. I mean, I was spending a lot of time just on the phone calling whoever I could think to call up, reaching out to people in my network, distant people in the network, just really trying to see how I could put this together.
Mm. But yeah, definitely, if you have a good deal, numbers look right, business plan is there, the investors definitely said, this is something we definitely want to get into. As far as like moving forward, as far as networking, are you doing anything as far as like any meetups or webinars or other things to get in new investors so you don't come into that problem for the next deal?
Yes. So I tried to attend, a few multifamily investor summits, conferences, whatever you want to call it, yearly, because there's a lot of investors there. I've started a local meetup here in Northern Virginia where we discuss multifamily once a month. I've also, I try to pretty consistently be on some social media groups that are focused on multifamily industry, because there are people over there sharing ideas, and you find people who are looking to invest in deals there. So I'm trying to, while I'm still underwriting deals and looking for the next project, also simultaneously be building relationships with the people who would look to invest in the next opportunity.
It's like a lot of moving parts, like, going to the meetings, having your own meetup and looking for deals. Is it kind of like a one-shop show for you right now, or do you kind of have like a small team? I know your dad is working with you on the property management side. Is there, you know, is it just you right now, and then you plan on scaling up at some point?
Yeah, so I've aligned myself with other capital partners who look to raise equity, and then also I use virtual assistants. So they help a lot with the things that I just don't have time to do, because as you said, there are a lot of moving parts. So you're trying to run a meetup, or you're trying to be active on social media, and you also have to run the properties that you have and communicate with investors. So there's a lot of things that have to be done, and so I found just trying to outsource really as much as I can,
Mm-hmm.
using property managers on the latest acquisition, just kind of following up with weekly calls with them.
Are your plan is to kind of keep within that 40, 70 unit range, or are you guys looking at some larger projects, and what's kind of the plans for the future?
Looking to grow bigger, right? So now I'm trying to stay within that $5 to $15 million range of properties, what we're looking for, preferably 100 units and up. So I mean that's the criteria right now, and that's what I'm underwriting.
Mm. Yeah, and mentioned just like a few mistakes that you learned, which I would say is always constant education, because you're always learning from something. Is there any other tips you can provide, some newer syndicators that you learned along the way that you can provide to us, that we can learn to mitigate at least?
Uh, yeah, a lot. I mean, I could probably go through two, right? So the first one, I didn't have any mentors. I was just reading books and going on my own. And so with that one, I learned through the School of Hard Knocks, I guess, to actually check the rental amounts, so that what I'm getting at is that just because an owner shows you a lease doesn't actually mean that the person is there. So we're talking about economic versus physical vacancy. And so I didn't know that. I kind of learned that out the hard way with that first acquisition. So that's definitely something that you want to be on the lookout for. Secondly, I guess with the syndication model was raising capital is a business in itself, right? It's something that you have to be strategic about, and that you can be doing on a consistent basis. And so I learned that the hard way, that it's not just, hey, go find a deal, and then people are just gonna break their necks to throw money at you for it.
Mm. You're just kind of piggybacking off your last point there. So you mentioned the meetups so you're doing it once a month, or you kind of been slowly building that up? How are you kind of building your coalition through the meetups?
Yeah, so there's actually a lot of people who are interested in it. But there were a few things that I did. So I was going out to regular meetups, well, not multifamily, but just real estate meetups, hoping to talk about multifamily. And I found myself like I'm standing here an hour, 2 hours, hoping I can just speak with somebody who's into multifamily. Everybody's wholesaling or flipping or whatever. So once I started it, I kind of grew the network from some of those other relationships that I had, as well as LinkedIn, doing like some advertising through that to kind of get people to come out.
Mm. Oh, so did you had ran some ads on LinkedIn? That's a new thing I didn't hear before.
It wasn't necessarily ads. It was just reaching out. So I had like a search for people who are in the multifamily industry.
Gotcha. Okay.
Area. And then I say, reach out, try to connect to them. Hey, I have a meetup. Would you be interested? As well as using meetup.com to do the same thing. So some of the other people who are in similar groups, I'll just reach out and say, hey, would you be interested in attending this meetup?
All right, very cool. Yeah, the thing that's very impressive is that, like I said, you kind of learned all along the way. You have all these processes and systems that you've been able to kind of put together to make sure these deals work. And knowing that you have a, military background, you seem like very structured and very methodical. Is there like any special routines that you have that kind of help you manage your dates in order to manage the flow of doing all this stuff, especially as you look to expand?
Yes. So I'm a miracle mourner, miracle morning-er, or however you want to say it. But I do practice that on a daily basis. It's one of the things I do. I don't know if if you haven't read Hal Elrod's Miracle Morning, I definitely would advise that. So that kind of gives me a level, even playing field every day. And then also there's something I learned called a Sunday system of success.
Mm-hmm.
So basically on Sunday, I try to look at the upcoming week and plot out, hey, what do I want to do this week? What do I want to accomplish? Kind of map that out for those things.
Oh, beautiful. As far as like, what's kind of like a typical day after you kind of get through the morning routine and like you have your plans? Are you a family man? Do you have other things that you do that kind of keep you busy?
Oh, definitely. So, wife, I've got 2 kids. That's a lot in itself, but it's fun, right? And so I do that. But a typical day for me is just really underwriting deals. I try to get through, as many as I can, really, or following up with brokers or writing out offers. That's really where I try to focus at. And then I try to shut down, have some family time, in the afternoon once everybody comes home.
Yeah, that's the thing, is just kind of making that balance. You're building a business, pretty much for the family, for the legacy, for the future. So like you want to be able to do a whole bunch of stuff at the same time. You got to have a little balance of, with the family as well. So that's very important. You had mentioned Rich Dad, Poor Dad, all of the successful investors, entrepreneurs read to kind of get their start and get them motivated. You mentioned, Miracle Morning. Is there any other books that you could recommend to the audience that helped you to kind of get your mindset, or to at least on the educational side for real estate?
Yes. Napoleon Hill has Think and Grow Rich. And so a lot of people, they throw that book out there. I like that one, but he also did another book called The Laws of Success. And Napoleon Hill Laws of Success is like Think and Grow Rich on steroids. I mean, it really takes those principles and breaks them down. And I love that book. There's so many gems you can get through it.
Beautiful. And I know you had mentioned that your family. Is there anything that you could say that you're most grateful for?
Oh man, I try to be grateful for everything. I mean, just as entrepreneurs, you always have something on the horizon that you're aiming for, that you're looking to get to. But I try to just be as thankful as possible for where I'm at right now, just for my family, that we have health, the accomplishments that I have gained, the things that I've learned along the way, as much as possible. I just try to be grateful.
Absolutely. Yeah, it was really a pleasure. And like I said, very inspiring, because like I said, you took it from just one unit and then building it up to multi-unit to now, to larger syndication business. I know with your company, S&S Capital Partners. How do we get in contact with you?
Sure. So you can reach me at jason@snscapitalpartners.com, or you can through the website, which is snscapitalpartners.com, or I'll give out my phone number if anybody wants to hop on a call. That's 571-409-1525.
Perfect. Brother, thank you, Jason. I really appreciate you taking the time with us, and look forward to connecting with you soon. Have a good week.
Thanks, Dwaine. You do the same.
Take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.